Guys, welcome to day. What are we on? What are we on? What are we on? Day 30? Are we on day 30? We're on day 30, baby. Let's go. All right. So, welcome to day 30, guys. Hope you guys are enjoying the academy as much as I am making these videos. They're pretty cool making these videos, and it's pretty cool seeing that you guys are learning a lot. I'm getting quite a few DMs every day telling me that, you guys are loving the videos and stuff, which is cool to see. So in today's video, don't forget to like, comment, subscribe, everything. Love you guys. But in today's video, we're going to be talking about SMT divergence. Okay. SMT divergence is basically going to be a cracking correlation or a discrepancy between correlated assets. Okay. So most of you guys know I trade futures, which is the S&P 500, the NASDAQ, right? And then Dow Jones, right? So those three are correlated assets. Those are the examples of correlated assets. For Forex, it could be like Euro USD, GBP USD, and DXY. Those are all correlated assets as well. And you could use Euro JPY, GBP JPY. Those two are correlated assets, for example. I have two videos on SMTs. This is going to be my third video on my channel. If you guys are more interested in learning like the correlated assets and stuff like that, you guys can go watch my first video on SMT. It's one of the first videos on my YouTube channel. And then I have another one in the How to Get Funded in 2024 series if you guys want to go and study that. Okay, so an SMT divergence, right? I've been rambling long enough, but an SMT divergence is basically going to be something like this, right? We have something like that, right? So let's say that this over here, let's say that this is ES, okay, the S&P 500, right? Let's say this is the ES index, and then we have NQ, right? Boom. Okay. So what do you see as the difference here, right? What do you guys what's different about NQ and ES, right? Actually, let's just throw the Dow Jones in here as well. Let's throw the Dow Jones in here as well. Let's throw in a little example for the Dow Jones. Right, so let's say that this is YM, which is the Dow Jones, okay? So what do you guys know about this? Like, what do you guys see as the difference, as the main difference, okay? So as you guys can see, NQ makes a higher high, while ES makes a lower high, and YM leaves what? Equal highs, right? Or a lower high, technically, or relative equal highs, right? Let's just say that this is like relative equal highs so I don't confuse you guys as much. But this is what I'm talking about. This is a crack in correlation because these assets right here, NQ, ES, and YM, they're all supposed to be in sync, right? So when they're not in sync, this is going to be smart money reversal, or this is where smart money, right? Smart money is going to tend to reverse prices or have some sort of reaction because you're getting a cracking correlation. SMT, this concept right here is probably going to be one of the most important concepts that you learn in all of this academy. It's one of the concepts that we are going to be carrying pretty much in almost every single trading model that I'm going to show you guys come the next week, hopefully. But SMT divergence is going to be one of the concepts that you guys really need to study and really understand, right, before we move on to the advanced stuff, because SMT divergence, again, is going to be smart money is going to give you a clue on where it's going to reverse by using SMT divergence, right? It's abbreviated for smart money technique, right? So that is basically what SMT divergence is basically when one of the correlated assets has a cracking correlation. For example, in this example here, NQ makes a higher high, ES makes a lower high, YM makes a lower high as well, right? You can even take out YM if you'd like and just trade ES and NQ, or vice versa, ES and YM. You guys could just trade these two, ES and NQ, since they're like the main ones, and the Dow Jones is kind of like the old head index, right? It's what a lot of older people trade. It's a very old index. It's the Dow Jones Industrial. But I like using all three because sometimes you don't see an SMT between these two, and then you'll have the SMT on YM. So that's why I like using all three of them, right? You could use two, whatever's more comfortable for you. I personally like using three. The more the merrier. 4 is a little overkill. I think 3 is the max, but yeah. And I'm actually going to show you guys an example from today, right? So if I split my screen here, I'm going to show you guys here. If I split my screen, right? Split my screen here. I usually like having NQ because NQ is the main one that I trade here on the right. And then I have ES up here on the top left, and then the Dow Jones here on the bottom. Okay. So I'm actually going to show you guys an example of SMT divergence, right? So if I just mark out these highs, I'm pretty sure you guys can see it right now just off the example that I showed you guys. But if you guys don't, you guys will see that this high right here, right, from this high to this high right here, you already have your SMT divergence with YM, right? And you have your SMT divergence here with ES, and then same thing here with NQ, right? You have an SMT divergence, right? So if I hover over this high over here, the highest high that YM made today, and you see it here, you notice that when YM makes this high and when ES and NQ make a higher high and it breaches those relative equal highs or those equal highs right here, right? So let me mark out those equal highs for you. Boom. Same thing here for ES, right? Oh, same thing here for ES. Equal highs, we smash them, we make that new high, and this is where YM comes to whenever ES and NQ make that new high. So then we have a bearish SMT divergence. This is a bearish SMT divergence, okay? This is a bearish one, right? Whenever we have one of the assets making a lower high and they're not correlated, this is a bearish SMT divergence, okay? If I were to flip this real quick, this would be a bullish SMT divergence. I forgot to go over the bullish and bearish ideas. Again, I have 2 videos on this already. If you guys want to go study it even more, you guys can. It's on my channel. It's not hard to find. But this is a bullish SMT divergence when one of the assets makes a lower low and one of them makes a higher low like this, right? So imagine if NQ were to make a lower low and then YM didn't make a lower low, it made a higher low. So this would be a bullish SMT divergence. And you would want to get in on the one that's stronger, right? Or the one that's weaker if it was bearish, and the one that's stronger if it was bullish. Okay, so if YM made a higher low, you would want to get in on YM. I personally don't trade YM though. I like trading ES and NQ only. But that's just, you could trade either or, and you guys will be able to on the models I'm going to show you guys. But for SMT divergence, a good rule of thumb is always short the weaker one that doesn't make the higher high. For in this case, it would be YM, and always long the stronger one that doesn't make the lower low. Okay, hopefully that makes sense. But this is basically SMT divergence, and as you guys can see, this is actually playing out beautifully right now. We formed the SMT divergence, and then where are we going, right? Where is our drawn liquidity based on this displacement candle and these beautiful equal lows down here, right? There was actually a bullish SMT right here as well. Let me go ahead and mark this out for you guys. So right here, NQ makes a lower low. ES from this low to this low makes a higher low. And what is this? Where is this at right now, right? No, well, not right now, but over here in pre-market. If you drag your gone box or your fib so you can get premium and discount, you'll notice that price is in discount whenever we make this SMT with NQ, okay? And also YM is not making that lower low like NQ is. You guys see that? That is a bullish one that occurred in pre-market, which sent price to go up. And then we had a bearish SMT up here to reverse to the downside to attack the opposing liquidity. So all reversals are going to start with SMT. All moves begin with SMT divergence. This is why it's a very important concept to learn. But as you guys notice that whenever we drag our fib or our gone box from this low to this high in pre-market, this was your current daily high and your current daily low. Okay, if you drag it out like this and you see this SMT occur, we're in what? We're in a discount, and we're at a key level, which is this 5-minute fair value gap. And look at the midpoint of this fair value gap, right? We never close a body below it, right? Remember that fair value gap video that we posted, right? Go study that again if you need to. We never closed a body below that midpoint, and then we pushed up. We attacked this black line right here is a higher time frame draw on liquidity. So if we go to the 4-hour, you guys see that right there, this high. It attacks that. So you could have got in right here, right? Boom. Place your stop at the low. Another thing with SMTs, guys, is when, for example, NQ sweeps this low, right? This low should be a protected low, okay? The asset that makes the higher low, like in this example here, this low should not be invalidated. This low right here should not be swept. If it is swept, then your SMT is invalidated, right? your SMT is invalidated and it's wrong. Okay. But most of the time, like I said, reversals and moves begin with SMT. So when you get an SMT divergence like this and your drawn liquidity is higher, like this example here, it usually ends up working out 95% of the time. Okay. Like I said, this should be a protected low because NQ swept that low already. NQ already swept that low. So ES should not sweep this low and YM should not sweep this low either. Okay. It's perfectly fine if YM does sweep it and ES doesn't. It comes close to it. But if we're holding a 5-minute fair value gap or a 15-minute fair value gap in discount of the current external range right here, which is this right here, it's perfectly fine to try long up to that liquidity there. And as you guys can see, it ended up working out and it went way higher. And then once we got another bearish SMT up here, guess what? We reversed all the way back down. And it looks like we are heading to the opposing liquidity, which rests down here at these perfect equal lows. And what's below those perfect equal lows? A 5-minute fair value gap. And you can also use that as a drawn liquidity. So yeah, that is pretty much what SMT divergence is. Make sure you guys study it. What I want you guys to do is go on your guys' charts. And again, this works on all time frames. This works on daily. This works on 4-hour, whatever you guys, want to, whatever time frame you guys want to get on. And I'll show you guys a quick example here before I let you guys go. You guys see here, right here, YM made a lower low. And look where NQ and ES didn't make a lower low, right? It made a higher low. So this is a SMT divergence with YM. If you didn't watch YM, you would have missed this SMT divergence, right? But since I like watching YM sometimes gives you that hidden SMT that you guys wouldn't notice if you just watch these two, ES and NQ, right? That's why I like watching all three, because you get this divergence here, this SMT divergence, and then look, this is the beginning of this huge move to the upside. So that is on the daily time frame. Of course, it's going to take a couple days to play out because, we're on the daily time frame and each of these candles are daily candles. So that is what SMT divergence is. Make sure you guys go on your charts tonight, study SMT divergence, look at where the cracking correlations are at. There was another one actually up here, I believe. Yeah, there was one right here, right? This is where the huge move to the downside ended up playing out. There was a SMT divergence here, right? ES and YM ended up making higher highs, but what? NQ did not, right? And then obviously it took a couple weeks to play out, but ended up going way lower to take out all this liquidity there. And in some of the videos in the academy, I told you guys there's a reason for, NQ or ES not taking a certain low. Well, that's because of SMT divergence, right? It's a protected low. It doesn't need to be taken out. So another thing real quick before I let you guys go, I know I yap a lot, but when you have an SMT divergence and one of the correlated assets makes higher, like equal highs, perfect equal highs, that's a valid SMT as well. Because I know somebody's going to ask that question. But yeah, guys, hope you guys enjoyed this SMT video. Again, if you guys want to study SMT even more, I have 2 more videos on SMT on my channel. If you guys want to go study those, I pretty much say the same thing, but yeah, that's pretty much what SMT is. Hope you guys are enjoying the academy and hope you guys are enjoying these concepts and stuff. But yeah, go into your charts, find SMT divergences. And again, if you guys want to ask me questions, if you guys want to confirm that you're doing this right, join the free section of the Discord. The link will be in the description down below. Appreciate you guys watching, and I will catch you guys in tomorrow's video.